Hmm.
So this is IAS 36, and IAS 36 talks about impairment of assets. What does it talk about? Impairment of assets.
Yeah.
So they tell you that whenever the carrying value of your asset means whenever the net book value of your assets is more. Net book value means what? You say na, cost minus debt to date, and you get the net book value.
Yeah.
Net book value is the value at which you show your assets in the balance sheet. Correct?
Yeah, miss.
So they tell you that whenever the value that you show your assets in the balance sheet, or you say the carrying value, is more than its recoverable amount. Recoverable amount means what? When you go to sell it in the market, the amount that you get. Okay?
Yeah.
So whenever your net book value of your asset or your carrying value is more than the recoverable amount, then at that time you should record your assets at the recoverable amount, and you should recognize the fall in the value of the asset, and this fall in the value of the asset is called an impairment loss. Okay, so when do you impair your non-current assets? Whenever the carrying value of your asset, the book value of your asset is more and the recoverable amount is less. At that time, you feel the need, and IAS 36 tells that you should impair your assets, recognize this as a loss, and change the book value of the asset that is shown in the statement of financial position. Okay. So when do you
Yeah.
impair your non-current assets? When do you impair your non-current assets?
Um.
When do you impair your non-current assets? I can't hear you and I'm waiting for you.
Yeah, miss. Hello. Can you hear me now?
When do you impair your non-current assets?
When the carrying value is greater than the recoverable amount.
So when the carrying value is more, okay, and the recoverable amount is less, that means you're showing in your books at a higher value, but the actual value that you will get from outside is less. At that case, you will impair your assets. Okay, now there are two ways. When you're finding the recoverable amount is said to be greater of fair value less cost to sell. Fair value less cost to sell means when you go in the market, you receive a market value. Okay. And if you
Yeah.
have to sell your assets, you might have to incur some costs. So recoverable amount is determined as fair value or market value minus the cost to sell or the value in use. If I am using that non-current asset, what is the value in use of that non-current asset? I will compare it. Whatever is greater, that will be my recoverable amount. Then
Okay.
what will be the impairment loss? When do you know you have to impair your non-current asset? When the carrying amount is more and recoverable amount is less. How
Yeah.
do you find the recoverable amount?
You have to see the fair value less the cost or your value in use, whichever is lower.
In that case, what will you do?
Um. So fair value, less your like your market value less your cost.
Okay, so
Which will
fair value is called what? It is the expected selling price minus the selling cost. What is
yeah.
value in use?
Value in use is the present value of the future cash flow into
Okay,
the business.
generated from using the asset. And what is
Asset.
recoverable amount?
The amount you recovered from the s- asset after disposal.
Recoverable amount is greater of fair value less cost to sales or
Yes.
value in use. So
Yeah.
whichever is higher, you will take that value as your recoverable amount. This recoverable amount is compared to the carrying value. Okay.
Yeah.
And then you will determine the impairment loss. The first thing is, when do you impair your non-current asset?
When your carrying value is greater than your recoverable amount.
Okay, fine. So let's go with one example over here. The first example, I I don't know if you have your PPT in front of you or no. So you have
Uh,
your net book value, your resale value, and benefits from use. Okay.
hmm.
Net book value is called what?
uh, Carrying value,
So net book value is the carrying value. Carrying value is compared with what?
recoverable amount.
Okay, so the recoverable amount is what?
It is greater of fair value less the cost or less the selling price or the value in use.
Okay, fine. So now you have, this is the fair value and this is the value in use, right?
Yeah,
So for vehicle A, your net book value is 16,600 and your value, your recoverable amount is what?
65,000.
No, it will be the higher of these two.
Oh, sorry, higher, not lower. 83,000. So in
So
use value.
recoverable amount is higher of fair value or value in use, 83,000. So
Yeah,
tell me, your carrying value is more than the recoverable amount or it is less?
the carrying value is less.
So do you need to impair the asset?
Yeah.
When do you do impairment?
Wait, when your carrying value has to be greater. No, the or you don't have to then. No, you
So
can't.
you
You
will
don't.
not do impairment. You will do impairment
Yeah.
only when your carrying value is more than your recoverable amount.
Hmm.
So in your first thing, so which is the value at which you will show it in the statement of financial position? This 61,600.
Yeah.
So for the first asset, you will show it in the statement of financial position at 61,600. Why?
Because the carrying like you're not impairing
Your
you have to
carrying value
impair.
is less than the recoverable amount. Okay. So
Yeah.
the recoverable value exceeds the net book value. So there is no need to show any impairment.
Hmm. Okay.
Yes. Do you need to impair your asset A or no?
Yeah, yeah, miss. Oh,
Do you need to impair your asset A or no?
no, no.
No. Let's go to asset B. What is the carrying value?
47,300.
What is the recoverable amount?
57,500.
Okay. How do you determine the recoverable amount?
Higher of
Higher of,
whichever. Yeah, higher of
higher
these
of,
two.
what is these two?
Fair value and value in use.
Higher of the fair value or the value in use. So here the carrying value is less than the recoverable amount.
Yeah,
So do you
you
need to
won't.
impair this asset? I will not impair the asset. So what is the value at which you will show it in the statement of financial position?
47,300.
47,300. And what will you write as reason?
As reason.
Huh, what will
Uh,
you write at reason? Why are you showing at
yeah, so
47,300?
the this thing is less than the carrying
Recoverable amount exceeds the net book value.
net book value. Yeah.
So there is no need to show any impairment. Okay, what
Yeah.
will you write as reason? Recoverable amount exceeds the net book value. So there is no need to show any impairment.
Hmm.
The idea is that your non-current asset should be shown at a realistic value.
Yeah.
Okay. Now go to the third asset. What is the carrying value or the net book value?
Carrying value is 32,400.
And what is the recoverable amount?
19,000. No, wait 1 second. 26,500.
How do you get the recoverable amount?
Higher of fair value or value news.
Okay, so now your carrying value is more than the recoverable amount.
Yeah, so you impair the asset.
Impair the asset. You will impair the asset, and what is the value which you will show in your statement of financial position?
26,500.
And what is your impairment loss?
You subtract both.
What is the answer?
5,900.
5,900. So your impairment loss is 5,900. What will you
Yeah,
write
yeah.
as reason? What will you write as reasons?
Because carrying value is greater, no? No. Carrying value is greater than your recoverable amount.
That is the reason. What will you do?
You impair the asset.
And your impairment loss will be,
5,900.
and your amount that will be shown in the statement of financial position is.
26,500.
I go to the next sum.
Yeah, miss.
What is net book value also called?
Carrying value.
Carrying value. Carrying value is compared with.
Recoverable amount.
Okay. Resale value is the fair value, and benefits from use is value in use. How do you get
Yeah.
the recoverable amount?
Higher of both. So 82,500.
82,500. So carrying value is.
Less than the recoverable amount.
So do you need to impair?
No.
No. And what is the amount that you will show in the statement of financial position?
1,400.
71,400. Okay. Asset E. What is the carrying value?
1,026,000.
What is the recoverable amount?
91,700.
How do you get the recoverable amount?
Miss, whichever's low, greater.
No, I want the words.
Fair value or value news, whichever's greater.
Whichever is greater. Okay. Now the carrying value is.
Greater.
Carrying value more than the recoverable amount. That
Yeah.
means you have to
Where the asset.
impair the asset. So you have an impairment loss of how much?
1 second.
Impairment loss of
10,000.
how much?
10,900.
10,900. And the amount that you will show in your statement of financial position?
91,700.
Okay, fine. For asset F,
Uh, Carrying value 63,400 and the recoverable amount will be higher of fair value or value new. So 70,600. Your the carrying value is less than the fair value. So you don't have to impair the asset.
amount shown in the statement of financial position?
63,400.
63,400. Come on. Let's take this as an example. So the carrying value is also called what?
Net book value.
And how do you find the recoverable amount?
Fair value or the value news, whichever is greater.
Higher of fair value less
Yeah.
cost to sell.
Yeah.
Fair
Okay.
value less cost to sell, or value in use, whichever is greater.
Great.
If if the carrying value is greater, then what will you do?
Sorry, miss. What?
If the carrying value is greater, then what do you do?
If the carrying value is greater, then you will impair the asset, and if it's less than the recoverable amount, uh you won't impair.
Okay, come on. Asset 1.
Okay, carrying amount 30,000. Greater is 50,000. So
How do you find? Hmm.
recoverable is 50,000. So it's less than carrying value is less than the recoverable. So you won't impair the asset.
Next.
15,000 carrying amount. 14,000 is the high greater from both. So 15,000, which is carrying value, is greater than the recoverable amount. So you will impair the asset, and impairment loss is 1,000.
Hmm. And amount shown in the statement of financial position?
14.
14,000. Okay, fine. Next one.
20,000 is carrying amount. Higher is 15,000. Carrying amount is greater than recoverable amount. You will impair the asset. So impairment loss 5,000. And in the SFP, you will show 15,000.
Okay, lovely. Understood?
Yeah, miss.
This is the concept of impairment.
Okay.
Okay. Now come on, look over here. Look at this example. Can you read the example?
Yeah, miss. So a machine was purchased in 2005 at a cost of 30,000. It had estimated useful life of 10 years and a residual value of 2,000. Straight line method 2,000 was provided each year until 31st December 2009, when machines written down the value of 16,000. Then 2010 December, it was found out recoverable amount was 9,000 and only 3 years
Stop.
useful.
Carrying
Okay.
value is how much?
9,000. Sorry, one second.
16,000.
16,000.
16,000. And recoverable amount is how much?
9,000.
9,000. They've directly given you the recoverable amount, right?
Yeah, yeah, miss.
Okay, fine. Read again. Read ahead.
It had only 3 years useful life, no residual value. In DEC 2010, income statement should be debited with 7,000. Annual depreciation for
Okay.
3 years. Yeah.
So tell me, carrying value is how much?
16,000.
It is more than the recoverable amount.
Yeah, so the impairment loss is 7,000.
Impairment loss is 7,000. It is shown as other expenses.
Yeah.
Okay. Your net book value will be your new amount.
Yes, miss.
Cost will remain the same at which you bought. And accumulated depreciation, you will take the difference. Are you with me? How
Yes,
do you
miss.
get the accumulated depreciation? The old depreciation which you had charged before, okay,
Yeah.
and plus the impairment loss.
Yeah, okay.
Old depreciation plus the impairment loss will give you the new depreciation.
You can also do cost minus the carrying value. Now you will get it.
Yeah, okay, fine. Let's go to the next part.
Yeah.
Okay. Now read the question. I have the question. I have been given non-current assets, building, plant and machinery, motor vehicle. Cost accumulated depreciation. I have been given the carrying value of building, carrying value of plant and machinery, and carrying value of motor vehicles. Are you with me?
Yes, miss.
Okay, fine. when I have to see whether I have to impair an asset or I do not have to impair an asset, they will give you the words as value in use. They will give you the words like value in use
Hmm.
or estimated selling price. What is
Okay.
estimated selling price?
Fair value.
Fair value. Okay, now look over here. They have given some information about the building depreciation. Because we are only dealing with impairment, we will only do impairment adjustments. They have given us something related to machinery and related cost of machinery. Okay, so for building, they have nothing given regarding impairment. I have no information. Plant and machinery also no information. Now for motor vehicle, okay, is a diesel lorry which was bought on 1st Jan 2019. It had estimated useful life of 5 years with no residual value. There was a government environmental policy that urged to review the value of this lorry. Now, this environmental policy is telling that you please go and look back at the value of this lorry. That means you have to change the value in the statement of financial position if the carrying value is more than the recoverable amount.
Yeah.
Okay. Now, the carrying value of the motor vehicle is how much?
Carrying value, 1 second. Of machine, no, wait, of motor vehicle, na, 36,000.
The carrying value is 36,000. And they have given you value in use and fair value before incurring selling costs.
Okay,
So,
so first you do 21,000 minus 4,000.
so this will
Uh,
become how much? 17,000.
then you will, whichever is higher. So the
So
value
carrying
in,
value is 36,000 and the recoverable amount is how much?
so whichever is higher. So the value in use is higher. So 18,500.
Okay, so here the carrying value is more than the recoverable amount. So it means what?
It means that you have to impair the asset.
So after impairing the asset, you have to show it at 18,500. Yeah,
So it'll be seven, yeah. So the impairment loss is 17,500.
impairment loss is 17,500. Your motor vehicle will be 60,000 and the difference you will write as accumulated depreciation.
Depreciation. Yeah.
Are you with me?
Yeah, miss.
Okay. So impairment has to be done. So can you
Sorry,
tell
miss. What?
me, so can you tell me
Yeah.
what are the steps to do impairment of an asset?
Yeah, sure. So basically, first you need to get your carrying value, which is your net book value.
Hmm.
Then in that, you have to compare it with the recoverable amount. So in order to get the recoverable amount, you will see the higher of the fair value with the value in use. So whichever
Fair
is
value less what? Cost to sales.
less cost, yeah. Yeah, so whichever is higher, and if your carrying value exceeds your recoverable amount, you will impair the asset. And if your carrying value is less than your recoverable amount, you won't impair the asset.
So can you tell me what is the purpose to impair the non-current asset?
So that you don't like overstate your
So when you're
ex-
impairing your
asset
non-current asset, your main idea is that your
value.
assets should not be overstated. So
Overstated,
your
yeah.
assets should not be overstated. Your assets should be shown at an amount
The
that
correct
does not
value.
exceed their assets should be
Because
shown at the amount that does not exceed their
yeah.
recoverable amount. So the financial statements are true and fair. So when you're doing this, you are following the accounting concept of prudence.
Prudence, yeah.
Prudence and IAS 36 of impairment of asset.
Yeah,
IAS
okay.
36 of impairment of asset tells us that our assets should be shown at an amount which is not more. This line is important. Assets should be shown at an amount that does not exceed the recoverable amount. And prudence tells you that your assets should not be overstated. This is the
Yeah.
reason why you need to impair your non-current assets. 3 marks, 3 points. Later on,
Okay.
you can learn this. Okay.
Yeah, miss.
Okay. There is a next question. To what extent the value of diesel lorry is to be impaired? We did this question, right, of the diesel lorry.
Yeah.
So to what extent you had to impair this? What was your impairment loss?
17,500.
17,500. So they said that the carrying value was 24,000. The fair value less cost to sales was 17,000 and the value in use was 18,500. In that amount, the current year's depreciation was not added. So we added the current year's depreciation also. So they got a new net book value. Are you with me?
You subtracted it now?
Yeah, but the old net book value was 36,000. Current year's
Yeah.
depreciation they added, so they got a new net book value of 24,000.
Okay.
Okay.
Yeah.
Now, what is your recoverable amount? Your recoverable amount is higher of these two. Higher of fair value and value in use. So your recoverable amount is 18,500.
Okay.
Since the carrying amount is exceeding the recoverable amount, there's an impairment loss of 5,500.
500. Yeah. Okay.
Okay. Do you
No,
know the property, plant, and equipment schedule?
no, miss.
Property, plant, and equipment schedule is nothing but you have costs minus accumulated depreciation. It gives you the net book value.
Okay.
And then you compare it with the net book value of the last year.
Yeah, fine.
You have carrying amount of the current year and you have the carrying amount of the last year. So when I do the property, plant, and equipment schedule, I will discuss this in detail, but you can see over here. So when you have the cost of the asset, you have the cost at the beginning of the year. Added, you will add any revaluations or you will subtract any impairment. So if you have impaired your asset, you will write that value of the impaired amount.
Yeah,
So you
okay.
will add revaluations and you will deduct the impairments. How will you get the deduction of the impairment? You will have your new value at which you will have to show recoverable amount.
Yeah, okay.
Okay. So what you will deduct will be the impairment. Are you with me?
Yes, yes.
And for depreciation, again, depreciation at the start. If you have revalued anything, then you will do the adjustments for revaluation and then you will get the carrying value of the current year.
Yeah.
And you compare it with the carrying amount of the next year. When I do the property, plant, and equipment schedule, I will do this in detail over there.
Okay.
Okay. What is meant by the term impairment?
Impairment is basically when your carrying value or your net book value of your carrying amount or net book value of your asset exceeds the recovery.
Impairment means reducing the cost of your asset and getting it to its recoverable amount.
Yeah,
Okay.
fine.
Okay. You can write that also. That is also fine. Now the next one. Come on. Fast, fast. Impairment loss for asset A.
18,700. Okay, so carrying value is 18,700. and your recoverable amount is 1560. Yeah,
Impairment loss. How
impairment.
much?
300. No, wait, 1 second.
1870 minus 1560.
310. Yeah.
310 for the first asset. For the second asset,
Second, no impair. No, wait. Yeah, no impairment.
for the third asset,
Impairment of 6 minus 13 or 55.
impairment of 55. Okay, so this impairment is in accordance with IAS 36. Now, there are
Yeah.
certain terms that you need to learn. What are the instances when an impairment could happen? Impairment happens when there is a fall in the value of your asset, when there is a fall in the value of an asset due to technology, when there is a fall in the value of an asset due to economic downturn, when there is a fall in the value of an asset due to restructuring, any 4 points you will learn. So when
Yeah.
does an impairment happen? Okay. Apart from that, you need to learn the definitions of amortization, impairment loss, fair value less cost to sales. What is the meaning of recoverable amount? What is the meaning of value in use, and what is useful life? This is all the learning things. So I'm writing and you will learn it. Okay. With this, we complete total impairment of assets.